Right now, someone in America is making their minimum credit card payment and feeling responsible about it. They do not know that doing exactly that, the thing the bank specifically tells them to do, is one of the most profitable things they could ever do for the bank, and one of the most damaging things they could ever do for themselves. The banking system was not built to help you manage money. It was built to keep you borrowing it forever. And the way it does that is so simple and so well hidden that most people go their entire lives without seeing it. If nobody ever explained how banks actually make money off you, subscribe now. This channel exists for exactly that reason. Meet Jennifer. She is 35, lives in Phoenix, earns $54,000 a year as an office manager. She has a mortgage, a car loan, and $9,400 in credit card debt across 2 cards. Pays every bill without fail. Never missed a payment in her life. Credit score 710. By every measure, Jennifer is responsible with money. And yet every month she sends hundreds of dollars to banks and gets nothing back except permission to keep doing it again next month. Jennifer is not in debt because she is careless. She is in debt because she was handed a system designed to keep her exactly where she is. Total consumer debt in the United States sits above $17 trillion. The average American household carries over $100,000 in total debt. Credit card debt alone exceeds $1.1 trillion. These are not signs of a population out of control. They are the completely predictable results of a system built over more than a century to make borrowing feel normal, necessary, and responsible. Banks in America earned over $200 billion in interest and fees in a single recent year. That money came from people like Jennifer, people who work hard, pay on time, and genuinely believe they are doing everything right. Jennifer had her moment when she sat down one Sunday to calculate what her credit card debt was actually costing her. She entered the numbers into a free online calculator. What came back made her sit completely still. If she continued paying only the minimums, it would take her 27 years to clear those 2 cards. And she would pay over $19,000 in interest on just $9,400 of original debt. More than double what she originally borrowed. The bank would collect every cent of that while she worked, paid her bills, and assumed she was handling things correctly. Jennifer discovered that minimum payments are not designed to help you pay off debt. They are carefully calculated to keep you in debt as long as possible, while keeping you just above default. The minimum is usually 1 to 2% of your balance. At that rate, most of your payment goes to interest and barely touches what you actually owe. Banks discovered decades ago that customers who pay minimums are their most profitable customers. Not the ones who default. Not the ones who pay in full. The ones in the middle, making payments, feeling responsible, never quite getting out. Jennifer had been the ideal customer for 3 years without ever knowing it. Most people think banks want you to default. They assume the whole trap is designed to take everything eventually. That is not the real model. Banks do not want you to default. Defaults cost them money. What banks want is permanent manageable debt that never fully resolves. A customer who borrows, pays just enough to stay current, and never fully escapes, is worth more to a bank than any other kind of customer. Jennifer fit that profile exactly, and so do hundreds of millions of people who believe they are being responsible because they always make their payments on time. That Sunday, Jennifer stopped doing what the bank recommended and started doing what the math recommended. She listed every debt by interest rate from highest to lowest. She stopped adding to a savings account, earning 0.4%, while her card charged her 24%. She redirected every spare dollar directly at the highest interest card first. She called the bank and asked for a lower rate. The first rep said no. She asked for a supervisor. The supervisor offered 3% less. She accepted it. She was done waiting to be rescued. She was learning the actual rules of a game she had been losing without even knowing she was playing it. Here is the deepest truth about banking that almost nobody says plainly. Banks do not just profit from debt. Banks need debt to exist. Every dollar in circulation today exists because someone somewhere took out a loan. When a bank gives you a credit card limit, it does not lend money from a vault. It creates that money the moment the loan is approved. A number entered into a computer, The money did not exist before you signed, but the interest you pay back must come from money already in the world. That means total debt is always larger than total money available to repay it. Mathematically, not everyone can escape debt at the same time. The system requires a permanent class of debtors to function. That class is not chosen randomly. It is built through product design, minimum payment structures, and financial education that teaches saving but never explains how compound interest quietly works against you year after year. Jennifer is 14 months into her plan. She paid off the first card completely and redirected that full payment toward the second, now hitting it with over $600 every month. She expects to be completely free of credit card debt in 8 more months. She did not earn more money. She just stopped playing by the bank rules and started playing by the math. The bank lost a profitable customer. Jennifer got back several $100s a month she had been quietly handing over for years without realizing it. In 2023, American banks collected over $130 billion in credit card interest alone. That year, the average credit card rate hit 21%, the highest the Federal Reserve had ever recorded. The average savings account paid customers just 0.46%. Banks were charging 21% to borrow and paying less than 0.5% to save. That gap transferred hundreds of billions of dollars from ordinary working people to financial institutions in a single year. Not through fraud, through design. One honest question. Do you know the exact interest rate on every debt you currently carry? Not roughly. Exactly. Yes or no? Leave it below. The banking system was not built against you personally. It was built for profit. And in banking, profit comes from debt that lasts. Understanding that changes how you see every financial product you are ever offered. Next video. The specific moment in history when banks stopped being places to store money and became machines to create permanent borrowers. That shift happened inside 1 decade. You are still living inside those results today. See you there.